It's now time to perform the last rites on it, and this legislation does precisely that.
Honourable Leanne Dalziel.
I want to follow on from the Minister's comments and also some of my colleagues. I've now got a copy of the regulatory impact statement in front of me. I do enjoy reading regulatory impact statements, but this one's of particular interest to me because now I understand why the Select Committee was concerned about it. And I just want to read a paragraph from it and then reflect on another element of it, because it actually does have a detailed analysis of where this $60 to $70 million has come from. We recommend that gift duty be repealed on the basis of enhanced efficiency, simplicity and administrative costs, and the significant reduction of private sector compliance costs, although fiscal cost is also a relevant consideration. We believe that gift duty does not fulfil its current objectives and the risks of its repeal are low. However, it is not possible to precisely determine the extent to which gift duty alleviates issues such as income tax minimisation, social assistance targeting and defeat of creditors. Therefore, it is important that affected government agencies monitor the effects of gift duty repeal on their areas and make any necessary operational changes. Now, it was also instructive, I'm so glad that I got referred to this, because of the government agencies that Treasury consulted with on this and the Revenue consulted, the obvious ones, Ministry of Economic Development, Justice, Health, Social Development and Housing New Zealand, because they are all relevant, but so was the New Zealand Police. And I think the New Zealand Police is in that mix because of that whole risk area around money laundering. So I just think that the Minister should give us a little bit more of a discussion point around what these different government agencies have done or are planning to do in order to address issues such as income tax minimisation, social assistance targeting fraud and defeat of creditors. And I would have thought defeat of creditors would have been a matter of significant substance for the government to actually consider under these circumstances. Now, I want to come to this question of how much this is going to save the private sector, as various government members have kind of chipped across the House at how much it's costing the private sector in order to be exposed to the gift duty regime. Now, I couldn't quite understand where the compliance costs of $70 million had come from, but now I do understand. So I do think I'd like to take the time of the House to explain very carefully where the $70 million comes from. Under standard gifting programs to family trusts, a number of deeds are required that must be filed with Inland Revenue in addition to gift statements. Initially, a deed of sale is required when the asset is transferred to a trust. Then a deed of acknowledgement of debt is drawn up, and annual deeds of forgiveness are required to reduce the outstanding debt. The average cost quoted by practitioners is $285 plus GST to draw up the annual deed of forgiveness and to file this along with a gift statement. If this cost is grossed up to reflect the 225,000 gift statements filed each year, this reveals more than $70 million in annual costs to the private sector, excluding the initial costs of setting up the gifting program, the deed of sale and the deed of acknowledgement of debt. Well, I find that extraordinary. I don't know whether others find that extraordinary as well. But what the government is essentially accepting as the basis for their claim that this will save $70 million is the fact that the regime that we have in place at the moment actually only allows $27,000 per year to be transferred without paying any tax. And what the government wants to be able to do is to transfer the lot instantly in 1 year with no tax implications whatsoever, which is exactly what will happen. And that is exactly what the legislation was kept in place to ensure would not occur for a whole lot of other reasons. Now, I recognise that the social assistance targeting does use a different set of criteria, and often it's the conflict between the two criteria that confuse people. They think I can gift up to $27,000 a year or forgive $27,000 a year of a loan, but in fact, Mr Chairman,
Honourable Leanne Delson.
but in fact the social security amount will be $5,000 a year, and of course they can go back year after year over 5 years in order to look at whether an asset or whether a person has deprived themselves of an asset. Now, I remember when the surcharge was in place, a relatively new member of Parliament at the time, who came in at the same time as me, one Michael Laws, went around the country explaining to people about how they could enter into a gifting program in order to avoid paying the surcharge, and he basically said that for 5 years you have to gift up to the $5,000 a year, but once you'd got past that 5 years where the clawback applied, you could gift up to the $27,000 a year without any worry in terms of shifting that asset. So in actual fact, there will be situations where the government is saying we will make it absolutely crystal clear that there is no limitation in terms of the transfer of the asset other than changes that may be made directly to the social security scheme as well. I haven't gone into the question of the creditors because I'm a little bit worried about where that might take us. So when the government of the day repealed the estate duty, then the gift duty, they say, was retained for an interim period. But what I'm really unclear about is what processes have been put in place in order to secure those three areas: the social security regime, the protection of creditors, which was the one that particularly concerns me, and the third area of protection in relation to the question of the means testing regimes that might apply, and also to other areas of income tax. So what I'm unclear about is whether the government has actually taken that additional step to provide for this coverage. And I don't believe that it's unreasonable for the opposition to want to see something a little bit more than the regulatory impact statement that has been prepared, because what the government hasn't said is why they think that it's acceptable that entire assets can be transferred with no implications for taxation or any other purposes. Why is that the driver? And it seems to me that by having a regime in place that allows the asset to be transferred at sort of without tax implications at $27,000 a year, then it does stop people, potentially income splitting. It stops people from potentially referring major assets over into the ownership of someone else in order to avoid something that they themselves find themselves in the position to be subject to. And if it is to really protect themselves against creditors, then that obviously is a major worry to all of the SMEs from one end of the country to the other, who find themselves at the end of queue after queue after queue trying to get money off people who've declared themselves without assets and are unable to claim it off them because they've transferred their asset in one fell swoop, rather than have to go through this gifting regime. So I don't think that the Minister really has taken the issues that we have raised serious enough, and I hope that he will take another call and actually work through each of those different areas and explain to us what steps the government has asked each of those departments to put in place to make sure that this doesn't have the impact that I think that the regulatory impact statement has alerted the House to. Mr. Speaker, when the regulatory impact analysis was done, there were only four options that were put forward by the government's for the government's consideration. I apologise, there were 5 options put forward for the government's consideration, and I want to know why this particular option was the preferred option, and what, Mr. Chairman.
Leanne Delsville.
Mr. Chairman, and I want to particularly turn to the question of creditor protection. There is some view that creditors are given some protection by gift duty because defaulting debtors are unable to transfer assets out of their name without either becoming liable for gift duty or entering into a gifting program. And I guess that's one of the advantages of having the system as it is at the moment. It's not so much the amount of tax that it collects, it's the fact that people construct their gifting program over a longer period of time in order to avoid paying the tax. So in fact, not paying the tax is part of what it's designed to achieve. The regulatory impact statement talked about the result of gifting programs being that the person who is transferring an asset receives a corresponding debt asset by virtue of the interest-free on-demand loan that is exchanged with the recipient in satisfaction of a market value sale. The diminishing amount of the outstanding debt remains because it can only be forgiven at a rate of $27,000 every 12 months in order to avoid gift duty. And I am aware of some of those instances where the issue has arisen that the $27,000 has been gifted within a 12-month period because it's not a calendar year. It's the 12-month period, and I know people that have entered into a gifting arrangement, a constituent, where they were on one side of the line instead of one side of the other line, even though it was more than 12 months. It wasn't within the year. It was a year later, but it wasn't the 12-month rule. But anyway, they had actually managed to get themselves in a bit of a bother over that. But the point was that a debt valued at $1 million would take an individual 38 years to completely forgive if you were avoiding gift duty. So if that was the point of it. The unforgiven portion of a debt under a gifting program can be demanded in order to satisfy credited claims against the transferor. If gift duty is repealed, gifting programs will no longer be necessary because the value of allowable gifts would be unlimited, and therefore when a person transfers a large asset there will no longer be any portion of its value which is immediately available to be clawed back. And I think that this is a serious issue, and it's probably one of the most serious issues. And that's because obviously an official assignee looking at a bankrupt situation, they would be able to use this as some leverage
Sorry to interrupt the member. It's time for the dinner break. I shall resume the chair at 7 p.m.